All right, well, it is quite a day today. You know, yeah, the SPX is not up very much. 7 handles, pretty good. I think we're going to stay that way. We might rally a little more, but not a ton. At least not unless there's some more news coming out, which I don't think there is. I've got my clerk checking that. VXX down pretty significantly. I wouldn't pay too much attention to the VIX. That's also price change. And don't forget that the VIX options are expiring really soon. Futures, I believe, expire on Wednesday. Now, the interesting thing is, I always get people telling me stocks don't gap up. Well, guess what? Stocks gap up. Take a look at potash. It's up 30 handles today. That's $30. Just looking at it yesterday, we saw a customer trying to buy 10,000 calls yesterday. I think they were trying to buy like 10,000 of the 115 calls in the dollar range. And you wonder, what does paper flow really mean? Paper flow means a lot. And I think every time we see a big trade like this go up, I think we know. Oh, no video. Sorry. Thank you. I have a 115 covered call. What should I do next? Well, if you are long a 115 covered call, is it an August call? If you have the POT 115 August call, I got news for you. There ain't a lot you can do. I think your best bet would be there still is some premium here, right? Let's take a look. We got the 115s. They're 100 delta. No, there's no premium. I mean, if you still like the stock, you could buy it back. The other thing you could do is just let it expire. I mean, this is, you could, if you don't think the stock's going up more, you could buy and sell and try and collect a little August premium. You could collect $3.40 trading that spread. So that would assist you a little bit. The problem is that if the stock drops below 137 between now and August expiration, you are a loser on the trade. So, it's up to you, but that's really your only option. Your other option is, if you really think POT is going up, you could buy. You have, if you want to stay in this trade, you have to buy the August 115s. Okay, you have to. And if you like the stock, you can go in and sell. The Dees 140s have $10. That's going to really cut that cost down. And Jan 140s have like $12. So that might be your better bet, is to roll out. And then the issue is then, what if the stock drops? Well, you can buy a put against it as well. Yeah, you could collar it out. That would be your other option, right? You could collar it. So what you could do is something like this. If you're long the stock, you can buy the 115s. Okay, this is basically how it's going to look. So you buy the 115s in August. You're going to end up long the physical. Okay. So if you buy those back, I'm just going to buy the physical. So there you go. Here's the stock. And then you could go into December and say buy the, we could buy the 130 put. Okay? You buy 100 of the 130 put, there's your bottom. So now, below 120, if you pay 5.5, Below 124.5, you're making money. Okay. Then we go and we sell. We could sell the 140, 145 collar. Something like that. You could do 3 of them. And you can see what that looks like. Basically, you're stopped out at 930 bucks, and if the stock takes off, you're going to win. It's a kind of different take on a collar. Does that make sense? So what you're doing is, instead of the straight sale, the straight sale looks like this, right? And you make money at, you basically are risking 640 to make 300, but the problem is you're topped out, right? So if you don't want to get topped out, we can buy an extra call. You see what it kind of does. Now, if you do 2 of these, you turn it into kind of a butterfly type of trade that actually does collect a little theta. Now, if you end up in this kind of land of no return, you're going to be in some trouble, but that's not for a long time. Take a look at how long it takes before this thing stops making money as it rallies. So that's another idea that I would look at. Now, we did have a couple of trades I wanted to go over. The VXX trade, I closed this spread out at a nickel, sold it for a nickel. It's 2.5 cents. I'll take it. We're bidding a nickel to close out the 24.25 call spread. I think we're going to get filled. Our SPY trade finally closed out. We actually ended up making that money on the trade. I was pretty happy. This Q call, if we rally much more, that's going to end up being great. The EM trade, right here is our EEM spread that we did not. What in tarnation? Oh, I need to reset. So here's where we are today. We're up about $5. Now here's the interesting thing. I bought the September 44 calls for 28 cents. I want you guys to pay attention to this. We're up, when I put this trade on Friday, okay? I put it on kind of in the morning when we were down. We were definitely down. Here we are. So we were at like 40.5, okay? Right now we're trading at like 41.5. So we're up a full $1, okay? The delta of the 44 calls is 20, and they've gained 3 cents in that dollar. How much should they be up theoretically? Guys, we're up $1. They're 20 up the calls. How much should they be up theoretically? Yeah, 20, 25 cents, right? And they're up 3. Okay, that is what I like to call the power of the fake delta. What is happening is you've got 2 things fighting. Okay. And this is where theoretical models fall apart, all right? The underlying is rallying, right? And we're going from 40.5 to 41.5. Well, in the process, the vol is falling, and that's keeping the delta constantly at 20. So you're not gaining any delta, and so thus so it's kind of a weird thing where if we were to go back and look at the original delta now, taking a look at this option, if we look at the 44 calls, they have 10 cents of gamma, okay? If we were to drop $1, the model is basically telling us that this option would really be a 10 delta, not a 20 delta, and that's the power of volatility. So remember that, okay? That these Greeks are not real. They are a model, all right? And on that note, I'll just want to quickly remind that give me a ring about kind of some specials. You know, we just ran our numbers. We are definitely raising prices beginning in September, all right? We're going to be raising prices at least 25%, probably 30%. And that's because demand has just been overwhelming at our current price level. So if you want to get in at current prices, it needs to be done, you know, in the next 2 weeks. All right. I am going to be giving a presentation with Electronic Futures Trader on Saturday. So if you want to see an options guy and a futures guy talking at once, shoot me an email and I will put you on that list. My email is mark@optionpit.com. And on that note, I'm going to wish everybody a great day and tons of success. Have a great one, everybody.